Uh, I really enjoy the NinjaTrader platform. I think it's really great. It makes sense to me as far as how they've done their layout and design and stuff. But we have the software on a bunch of different platforms, and it all works. With the Zone software, it does work the best with the NinjaTrader platform, just because it gives us the most flexibility in the back end. But what I want to share with you is these ideas and concepts of how the software works and why and what it's really telling us about market action and about the market structure. Okay, so I'm going to assume that you guys may be brand new to trading and really looking to go deeper and understand what is all this stuff meaning, and how in the world do I get into this crazy thing called trend. As we look at price oscillating up and down, we need to realize that the market does move in waves, okay? And in order to identify when we see major pullbacks or retracements in the direction of trend, how to identify those areas, all right? How to identify the common principles of supply and demand, support and resistance, all right? And what I'm going to be using is a higher time frame here, and this is, we're just going to say that this is supply and demand for right now, for the purpose of this exercise here, okay? Now, the zones are going to draw based upon the consolidation of price action, all right? That's what they do, all right? Whenever we see price action consolidating, like over here, and we kind of can see like a level below a level, this is really strong resistance, okay, or really strong supply, all right? And you see the numbers in red representing resistance, okay? So we know those are resistance zones, and price pushes away and bounces just off the edge and pushes away. We're in a downtrend, okay? And these are the pullbacks that represent good selling opportunities with that direction of trend, okay? So right now we see ourselves retesting a blue zone, okay? We've gotten just a little bit of bounce over here, and after we've gotten just one single little bounce like that off of a zone, that's all that we're expecting from any particular level, okay? Just one little bounce, all right? As long as we get one bounce, we're happy, all right? And sometimes we get really big bounces, and sometimes they're really small, but one bounce is all we're looking for. After that, price can push through a level, and it's no big deal, okay? The zone has done its job, all right? So that's really what we're looking for each one of these zones. And if you guys aren't familiar with the colors on it, every zone starts off with this nice aqua color. And then after that one bounce, it moves to blue and yellow and then purple and so on and so forth, okay? Until it ends up with like a brown color. And I personally like to just show the current two levels just because I like nice clean charts. I'm a real big purist into understanding what the bars are telling us and just watching the bars as they move. Okay, so just looking at this, I'm just going to show the current levels and then show the most two recent zones on the big time frame and on the small time frame. Now on the big time frame, what this is allowing me to do is I'm able to look at supply and demand on this chart and say, hey, I know that there's a level right here. And on the smaller time frame, my support and resistance time frame, this is my supply and demand, this is my support and resistance. This allows me to watch the ebb and the flow. Like, why does price action move up and down? Okay, look at the areas of consolidation. Look at the areas of expansion. If we show all of our zones on here, we're going to see a whole bunch of different levels here. And as price moves out of these areas of consolidation to areas of expansion, when price comes back down here, we expect to see, price bouncing off of these levels. Maybe it'll go straight through if it's a blue zone, but we're looking for reactions off of these levels. Now, if the trend is truly to the downside still here as price interacts with these levels, these are just going to be minor support levels as price moves down. It's going to give us the ebb and the flow, like why did price come down this way? So kind of a case in point, what we have available with the zones here is we can view these dead zones, okay? And the dead zones are really good at seeing that ebb and flow, especially on a small time frame like this, or if you're on a range chart or a tick chart or a volume chart or something like that, you'll see the same type of deal. Okay, so as we look at price coming here, we can see this big zone. And like what I said is all we're looking for is that first bounce off that level. And boom, we got the first bounce off the level. And in fact, we got a few more than that. I mean, look at that thing. It hit it once, twice, 3, 4 times, okay? That area gave us some resistance, okay? And pushed down off of that, you know? Same thing for this one. You know, if we circle these different levels here, 1, 2, and we'll say 3, okay? So that's all we're looking for. Just one little bounce. Sometimes that's all we're looking for, all right? And as price does that over time, back and forth, we're just monitoring the support and resistance that the market's giving us, and we're keeping track of it for the long haul. And that's why it saves us so much time, because we can understand, you know, why did price, you know, kind of bounce around here and give us a little area of consolidation? Well, bounced here quite a few times in the past. You know, what's important about this this bigger level right here? Like, look at how just a couple of these wicks come in there. You see that? So on the smaller time frames, this is just going to be support and resistance. You know, that's all. And it's nothing more, nothing less. You're going to be able to get into your trend move by using the zones on a smaller time frame. All right. Now, the other helpful thing about showing the dead zones is a lot of times we will see levels reform themselves. Like you saw, you know, price bouncing off of this level here a couple times, and then lo and behold, it reforms itself. But it reforms itself a little bit bigger than what that previous level was. All right. This level reforms itself, and it kind of reforms itself into 2 zones. Okay, so we're keeping track of the ebb and the flow and what the general area where you could find support is with these zones. Okay, so I unfortunately am not seeing any questions right now, but if you guys have questions, please feel free to keep on asking them, and I'll try to answer those things. All right, so that's what that's doing on that chart. And here on the bigger time frame, it gives us more of a supply and demand type of idea. Okay, where is generally low and where is high? Okay. And do you have a question there, Nigel?
Yes,
just
I do.
Out of curiosity.
Yes, I do. I'm still not clear what a dead zone is, says Robert.
Okay, so a dead zone or an inactive zone is simply that. Price has bounced off the level maybe several times, okay? Like I said before, we're only looking for one bounce off of each one of these levels here, okay? So as soon as price bounces off of these levels, that makes it like a valid zone. If price doesn't bounce off of it, then it's not really valid to begin with. But as price bounces off of it, it makes it a valid zone, all right? Then when price goes through the level, so when this was a resistance zone at the time, then price went all the way through this level. So as soon as this candle closes above this zone, that level is then terminated or becomes inactive, and we look for possibly a flip-flop of that area, okay? And lo and behold, we have 2 zones now, one forming on the edges of that area, saying when price comes back into this area, look for price to respond in those 2 areas as far as support and resistance is concerned, all right? That's what that's referring to, and that's how the dead zones are important, and that's why we give you the ability to see the zones, all right? Because these zones will draw, and it's a time-saving tool, okay? We know that in the top part of this, like a bigger time frame zone, if we look at the high zone, we can see a yellow level up there. It's fractal. Okay?
Can I just ask 2 more questions when you're free?
Yeah. It's fractal in nature, and so it's drawn some resistance up there, and so we've gotten a retest of that level, and now we're coming down out of that level. All right, so we know that support is down here, so we just need to wait patiently. And if the trend is to the downside, maybe we take the short, or maybe we're saying that the trend is up, so we want to buy relatively low and outside of the bigger supply level, buy down here, so that as we retest resistance again, we've already gotten a relatively low entry from these two levels upon levels. Okay, so when when the levels get really close to one another like this, and they stair step on top of each other, or just like they're right on top of each other, that's really good support there. Okay, so one of those levels are likely to hold, and we'll see a retest back up into the highs. All right. So that's how we can use the zones to give us an idea of where is high, where is low, and then all the intermediate price action in between low and high.
Okay, I have a question which I'd like to ask you, which I get asked a lot by the Hawkeye clients. Which is the best time frame that gives the most solid results? Let's do first of all intraday. I mean, obviously, as you're getting faster and faster in time, the vibration becomes a lot faster. Are they still valid, or do you find that a 15-minute, a 30-minute, a 60-minute, or
Yeah.
which one?
So for the intraday day trader, I feel that 60-minute is the biggest time frame and gives us the best view of supply and demand. Then the 15-minute is kind of, it borders on both supply and demand and support and resistance, okay? So if we look at the 60-minute time frame, check this out, like look at that. We got the low down here where that yellow zone is, and we've just recoiled off of that. Oh, well, I guess I thought it was touching that, sorry. But we know where that low area is, and we can see this as kind of a general pullback area, okay? So this would be supply and demand for me, all right? And then this is support and resistance / supply and demand. And as far as the big time frames are concerned, like swing trading and stuff, which I use this for swing trading all the time, and it's absolutely awesome. What we would be looking at here is for like a big daily time frame, or excuse me, like this would be a weekly time frame. Then we go into the daily and maybe a 60-minute or a 4-hour type of time frame. All right, so that's what I would be using for the dailies or for the swing trading type of perspective. Okay, so I hope that makes sense as far as how this stuff all reads out.
And you can see how the 60-minute came down to that bottom zone area. A couple of questions. Frank asked a question about Hawkeye pivots. No, it doesn't, Frank. I'll come on to that when I start talking through volume. Some zones have two colors. What does this mean from K? That means K, that one bounce is blue, two bounces are an orange, three bounces are purple, and four bounces are sienna. So it just shows you how many times that price has visited that area. So what was the resistance now is now potential support. That was from Robert. I think the chart has moved on from there.
Right.
And Vladimir, I'm using TradeStation and have sometimes zones with zone-like supply within demand or demand with supply. What is the meaning of it? Do you understand that question?
Yeah, so sometimes your zones are going to be like it's happening here kind of on the daily idea, okay? You see this daily chart here? All right, so what this is meaning to us is if you see a demand, you see those little green numbers inside of this supply zone, this would be one of those like flip-flop areas. You know how the supply and demand curves shift over time? Like let's just say that this is your supply and demand curve, moving along over time, right? And you like have a little shift, right? So what this is meaning is that if we come out of this area to the upside, Okay, first off, we're going to be looking for resistance up there, but this new formed demand zone inside of the supply zone, that will give us the support of, like, we're going to probably see some type of breakout and then a retest to a brand new demand. And it's like that flip-flop of support and resistance of supply and demand. And it shows it to us in real time, so that way if you miss the breakout, you can get the pullback, which is usually more lucrative because then it goes even higher in that direction of trend. So that's what it's showing you there, you know. Let me stop drawing here on my chart. And just to kind of share with you guys some of the new development stuff that we actually have coming on, we're going to be bringing out like I call it like elite version, or we'll just say an upgraded version of all this stuff. And just to show you the power here of the zones, we can actually use the zones to define trend as well, all right? And what we're doing here is we're just looking at the three most recent supply zones or demand zones or support and resistance zones to be formed in one direction. And as soon as that happens, like on this chart here, as soon as this happens, okay, and I'm just going to turn on the dead zones here just to show you this, okay? So as soon as the resistance zones are more prominent or newer than the demand zones, it changes the background and changes the trend to the red side, okay? So changes red right there, just as soon as this area of consolidation was formed and the zone is created, all right? Now, lo and behold, the background is red, meaning we're looking for a pullback and to sell this thing again. And if you look at all these zones, yeah, you get a couple pullbacks, but they're very brief bounces, and we don't get any engulfing candles off of them. When we trade the zones, or when I say look at the zones and look at how to trade the zones, I recommend we look for engulfing bars for like a zone to be formed and then a red candle to be closing below a green candle that's touching the zone, all right? And lo and behold, we see that happening in these two areas. There's one and there's one. And both of them gave you a good bounce. And this one gave you an extremely good bounce. And price comes down, you know? And this level holds as you can see, like the trend is flipped over and you got this wonderful bounce, you know, and price continues to roll to the downside. And then when demand, you get the three zones of new demand form, it changes the background green. So now you're just looking to buy the demand areas, okay? And lo and behold, you get that nice little engulfing bar pattern right there. You know, like that's pretty cool. You get it right there, and you're just able to get on board. Now, sometimes you see like the price action goes through the zone really, really quick. And if this happens, don't worry about this, okay? Price hasn't validated that zone at all. All right, well, it actually had a nice bounce over here, so we already had our money bounce off this level, but price hasn't stuck to that zone at all. And don't let that worry anything about it, because it broke the level, so you don't even worry about it, okay? Because it's not a valid level, okay? You can't buy that anyway. We're looking for the zone to hold, and you get this nice little engulfing pattern, and boom, it rockets off there, you know, and just shoots on up, you know. And you can do this all over the place. It's like so cool. Like I'm really amazed at how simple it can bring our trading, because we're just looking for the levels to give us the trend, you know.
Can I interject?
So,
Can I interject?
yeah.
And that is exactly what the floor traders are doing. You know, in the days when they were pit traders, they knew
Mm-hmm.
the support and resistance levels. They knew where price was going to, and they would take it and they would push it back up. They would fake it so that people were faked into trading to the upside, and then they would push it back down again. And this is exactly what the zones do, and it shows you to the point where it'll happen. That, coupled with the volume, which I'm going to show you shortly, is very powerful. And one of the things I didn't say on the introduction to Gabriel is that many people try and how can I put it, work with Hawkeye, and they come to me and they say, I've got this, I've got that. I have to tell you, Gabriel is the only person that we've ever partnered with and ever said, yes, we would like to bring this into the Hawkeye suite. Because when I saw it and I saw the power of what Gabriel has invented alongside the Hawkeye volumes and the Hawkeye indicators, it was a wow. There's something with this. And that's why I wanted to combine the two today rather than have two separate ones. There are a couple of questions coming in. Do more bounces mean that the zones get weaker and will be penetrated? And that's from Frank. Frank, that's a good question. Before Gabriel answers that, I just want to tell you something. When I first started my trading back in 1986, I went to a seminar at O'Hare Airport for a GAN convention. And one of the things that I learned at that GAN convention, which has really stuck with me ever since, not that I'm a huge fan of WD GAN, only because it's such gobbledygook, you can't follow it. But some of the things resonated with me, and one of them was that view support and resistance rather like a floor and a ceiling, and you have a hammer. If you keep hitting it and hitting it and hitting it, you will go through it to the next support level, and then etc., etc. So if you think of that, and Gann said prices go through on the fifth attempt. Now, I don't know, Gabriel, have you done that? Have you ever done any quantitative analysis to say how many times is a zone hit before it is broken? Because that would be rather interesting.
Yeah, I would say that from my perspective, I found that the trend is very, very important. I talk a lot about, the shifts of supply and demand. If we're in the middle of a downtrend, if we're moving from, bigger term supply up here to demand down below, okay, the levels tend to stick more on the resistance side of things. And that means that in this little bounce, you may actually have, like this may be the 60-minute time frame, but in the smaller time frame, you may have this recoil come back up here, and this thing may get hammered like 5 times, and it just acts as this wall. So I really feel like it's more important to define the trend and be cognizant of where the trend is versus looking at one particular zone on any given time frame and saying, well, this level held really well here. If the trend is down, more than likely this kind of thing is going to happen. Okay, you're going to see a lot more of this, and especially with this new version of the software coming out, like look at that, like there's like 2 little wonderful bounces off of that thing, and it's still going down, like it's really cool because as soon as this thing forms, you'll a lot of times see on that third zone that's formed, you'll see multiple bounces off the level. I'm not seeing it quite right here, but that would be what I'd be more interested in looking at,
And am I right?
So, yeah.
Am I right in saying that as Hawkeye, we don't charge for upgrades, and there will be no charge for an upgrade of zones? Is that right?
Right,
Yeah.
unless we change something major.
Yeah.
So
Yeah.
with a new package.
Yeah.
Yeah.
That's exactly what I say. The other thing that I said to Gabriel week before last, or maybe last week, was that I don't consider support and resistance to be iron bars. I consider them to be elastic bands, so they can be bent by price. I like to see prices outside of the band with no part of the candle or the bar touching a zone to really define to me that it's broken it. And that was very fundamental in my trading. Have you done any work on that, Gabriel, at all?
Well, that's kind of how the zones came to be. Was I was trying to measure support and resistance the way that I really felt like it was. It wasn't a line on the chart. It wasn't a solid, like, hey, we failed to break the high right there, therefore I'm only going to take it when it touches that line. So, I'm going to take it short as soon as that line gets hit.
Yeah.
Lo and behold, if you have a level drawn up there or something like that, then maybe down here looks like a good retest of it, that kind of stuff. So that's really how the zones were developed, because there's nothing out there like that
Mm.
when I was studying the bars. Like it was all support and resistance lines. It's very, very,
Yeah,
you know,
yeah.
rigid,
And
as
that's
you
what I
said.
used to do because I used to have I know I don't look that old, but I actually started trading before computers and got highly excited when Radio Shack brought out a handheld calculator that could do a moving average. It was nearly better than sex when we found that. But what I used to have was a large table, which was a wallpaper table with chart paper, and used to draw my stuff and do my volume interpretation on it. And of course, then I would look over to the left-hand side of the chart and draw lines across, etc. And that became then into Hawkeye pivots and what have you, and I saw stuff. But that's exactly how I started, and it's interesting that you went down the same path too, Gabriel.
Yeah.
You've got
So,
some more. You've got some more questions.
oh, okay.
One from Frank. Can you give some main rules to use the zones? It seems rather subjective. Okay. Do you have main rules, Gabriel?
I have a few good rules that you can use. First off, if we're talking about uh, I'm all about taking something very subjective and turning it into something very uh, objective. Like that's the number one rule I have, you know. So first off, as far as my personal criteria goes here, I'm just going to give you my daily prep. Okay. So first off, we're going to find the bigger time frame levels. Okay. We're going to identify where we see reversal areas happen. And how we identify reversal areas or reversal zones is because I'm a day trader, I'm going to be looking at 60 and 15-minute confluence, like when the bigger time frames are overlapping, and maybe there's yesterday's high or a Globex level or a major pivot point. If you're familiar with the pivots, how they work, you know, and how they're calculated. I'm going to be looking for those levels to find the major reversals, all right? And then I'm going to define the trend, okay? And then after you define the trend, you go into each trade and you say, hey, this is what I'm looking to do. This is a trend follow trade, and I'm just going to wait for the pullback inside the zone and follow it with trend. It's amazing to see how much that actually works. Like, that is absolutely amazing. So just do the trend follow trades. Don't worry about the reversals or anything like that, picking the tops or the bottoms. Just follow the trends the way the software presents it, you know, and it works well. So it's funny because most people that get into trading have a real go against the flow. They like to swim upstream type of people. They don't mind being, you know, against the general populace on something. But when it actually comes to being a successful trader, you have to be able to run with the trend, which
Yeah.
means you got to follow the herd mentality in a way. So,
Absolutely. Remember, this is the only game in town which is you against you. You can't blame an architect, a council member for not getting planning permission, or your house is falling down. It's you that made the decision to buy this. It's you that made the decision to still hold it through stop losses because you had an opinion. It is a wonderful, wonderful journey trading. And one of the key points, and I'll come on to it when I start going through my volume, one of the key points is to actually do some work on yourself mentally. Read Trading in the Zone, do the Hawkeye mindsets, find out what time frame suits you. Because just like an athlete, some people can run marathons, some people are sprinters. You need to find what's right for you. I have seen many thousands of traders over my years around the world. I've probably run seminars around the world. Probably over 3,000 have come to see me speak. And always when I start drilling down into them, the big error is, and the biggest choice a trader makes is, what time frame do I trade? And most traders make the wrong decision on the time frame. It's a bit like riding a horse. You know, you don't go into the Kentucky Derby or Derby, as you say, straight away. You ride a pony, a nag, an old horse, and work your way up. Whereas everybody who starts trading thinks they want to trade a 5 minute in the S&P, which is the most elegant and sophisticated market probably in the world. And you get chopped up. Well, you know, if you go and trade a daily or a 60 minute, like Gabriel was saying, you can handle the vibrations and you can get through it. It's one of the biggest decisions you have to make is what time frame do I trade? And most traders are undercapitalized. Because they're undercapitalized, they trade too fast a time frame, they get flicked out and they become one of the 85% of people who started trading and went. If you start off on the slower time frames, move up to the faster time frames. I would say, if I could be arrogant, a pretty good trader. Even I struggle around the fast stuff because, hey, what's going on here? You know, on the slow stuff, I'm absolutely whizzo. I don't have any trouble.
Yeah, and you know, we were looking at this the other day, like on the swing trade stuff that we were looking at here. You know, like we were looking at all these different markets here. You know, and
This
like
is what we sent out to
we were
everybody.
right, we were 3 for 3 for this thing.
Yeah,
You know,
and
like
we
we're
sent this
playing the
out.
right.
We sent this out to you guys on the weekend before we did a presentation on the Tuesday. And I don't know many people who can do this, but Gabriel did it. He said, these are the trades to watch. This is where they will turn. And 3 out of 3. Boom.
So once you know how this thing works, it's all you're doing is buying and selling pullbacks in the direction of trend. That's all we're trying to do. You know. So we need to know where our support and resistance is, and when you understand that, there's some traders that are zone traders out there that literally can trade it up and they can trade it down because they know where these levels are, and they get in a few times a day. And we have one trader that's working the S&P with a few hundred lots per trade, and he just kills it up and down. It's absolutely amazing. So it's when you understand what's going on, then there, you know where high and low is, you know, and from an analysis perspective, that's huge,
Yes.
you know,
Yes.
because you know where the trend should be taking you.
What
You
you're
know.
really saying, Gabriel, is music to my ears, because what you're saying is that trading is all about risk. It's not trading the gold or the S&P or Bank of America or Apple. It's what is the risk that I'm taking on this trade entry, and combining it with volume, combining it with the zones. I've got to tell you, gives you the edge. You got to study it, you got to learn it like anything else. But once you've mastered it, it gives you the edge. Would you agree?
Oh, absolutely. You know, we're risk managers here.
Yeah,
You know.
yeah,
And
yeah,
if you don't know how much risk you should be taking, usually your trend follow trades will be bigger stops.
yeah.
Your counter trend trades will be smaller stops, you know, and
Or
it's a
let
sucker
me
punch.
let me interject. Let me interject.
Yeah,
If you're intraday trading, your counter trend trades are smaller profit targets, and with the
yeah.
trend are bigger profit targets, because I believe
Hmm.
that when you're intraday trading, you must come out on profit targets, not on stop targets. So you're saying, I want to take X amount out of this move. If it's against the trend, you're not going to take so much. If it's with the trend, you can breathe yourself. And that's why I try and educate everybody to trade with multiple contracts. It is crazy in money management terms to trade with just one contract. It's better to trade with 3 contracts and make them smaller mini contracts, so that you can say, I'm going to do some money management. I'm going to take a third off, well, 40% off at one target. I'm now in a free trade. I'm going to take another 30% off at X amount, and I'm going to let my last third free to roam. I'll take that out when the market tells me or when the volume tells me. And if you start doing that, you build it, your portfolio and your bank balance up very, very nicely.
Hmm. Just to echo that thing, I pulled a dollar move out of crude yesterday. It was really nice,
Jeffrey
just because I
Wright,
was
Jeffrey Wright,
following the trend.
yeah, Jeffrey Wright has said, do the zones have any relation to fib levels? Jeffrey, I can show you fib levels that work every time and none that work at all. In hindsight, they're wonderful. live edge of the market, I have a huge question mark on them. I mean, people will show me time and time again that they're wonderful. The jury's out in my book. I've seen a lot of fib traders, a lot of Elliott wave traders. One of the greatest Elliott wave traders around has software out there. He died a few years ago. And he said, Nigel, he said, you know, I prefer Hawkeye. And he's got one of the biggest programs out there. And if anybody wants me to tell their name privately, I'm happy to do so.
You can always make a fib line up with these levels. The levels are fractal. The markets are fractal.
What do you mean?
It's really interesting.
What do you mean by fractal for our attendees?
It means that it is the same pattern repeating over and over again, regardless of scale. So as we step up from a minute to a 5 minute to 15, it's the same type of pattern. I've gone really deep in this study, and I've actually seen that basically anything that has energy has the same fractal pattern. Okay, so as energy is exerted, you will see the same fractal pattern work.
It's funny that you use the word energy, because about 8 years ago, Hawkeye wasn't called Hawkeye; it was called Market Energy. And everybody just thought I was trading oil and gas, and then I changed it to my nickname at school was Hawkeye, because my name's Nigel Hawks, but it was Hawkeye, so I just changed it to my nickname. But it was, if you got Hawkeye 8 years ago, it was called Market Energy.
Mm-hmm.
Yeah,
that's interesting. So yeah, it's been really interesting studying down that, but that's a whole nother topic in and of itself, and we really don't have time to cover all that today. So,
okay.
But you do have a fib tool that you can automatically draw in, at least in the NinjaTrader version of Hawkeye Zones. You could draw in your own fib, and then you can show and hide that thing. So it is kind of interesting. It only does the most recent, zone pivots, but
yeah,
it's
great.
there.
Okay, couple more questions just to wrap this up before I do my bit. Jeffrey, and I think I know which Jeffrey it is, keeps asking, do the zones level have any relation to the channel lines? And I would guess no, but do they have any relation to channel lines?
No.
No.
It's all based on
And
historical
Tim G,
volume and price action.
and Tim G, I don't know if that's my old friend Tim Greenwood. When and how to determine the end of a trend? Well, that's something that I'll come on to, Tim. And for intraday trading, okay? No, he's not an old friend of mine. I've got a friend of mine in California called Tim Greenwood. And the last question is from Frank again. Actually, Frank has asked a couple of questions. Kay, when will the video be available in the members area? I'm recording it now, so I'll try and get it posted. I'm not very technical on this, so I hope I don't screw it up when I'm trying to download it afterwards, because this is a good chat that we're having here. And the last question before we let Gabriel go, or he's very welcome to sit in and interject as I've interjected with him. Oh, that's a good analogy. The zones are rather like Russian dolls. They all sit inside each other, yes? Different colors, and then they break out. Yeah, that's quite good. Okay, so Gabriel, thank you all. Thank you very, very much. If you'd like to hang around, you're more than welcome. If you want to go off and do other things, thank you very much. By the way, everybody, we had some major discounts on the zones and major discounts on the volume. I will be posting those up again, although they expired. I'm going to just give you those. So if you don't have either of the two indicators that I'm going to show you, don't worry. Now, am I presenter on this?
I will make you presenter.
Thank you. Show my screen. Don't leave me yet. Okay, can you see my screen on the S&P?
Yep.
Okay, everybody. Well, Gabriel, thank you very much. I'm in
Thank.
awe of the work that you do, and I love working with you. And what we're going to develop
Yeah,
this year, I think, will be stunning. So thank you.
absolutely.
If you'd like to sit and jump in if you think I'm saying anything stupid, that would be great. Or if you, so there'll be a lot of intervention. Or if you think that you got a different spin on what I'm saying is quite interesting. But right now, for example, if we come over here, and it was very interesting, these were the zones that were coming up as Gary was talking, and of course the Hawkeye volume here is saying red, 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 no demand as it was coming down to levels, and then it's just punched its way down. And this is what I'm saying, it's pushing itself back up again. But I want to move off that and start with something pretty standard for you. Now, this is for all the volume people, and I don't, please, the zone people, hang around. I want you to stay if you can and bear with me, because I've had over 20 years journey in trading, and I still survive, and not many people could say that. And I make, without tooting my horn, a fabulous living out of it. And I'm very relaxed in my trading. It's a bit like riding a bicycle. Once you learn to do it, it's easy. You don't fall off. When you're first starting, you fall off and off and off. But I just want you to understand the basic concept of trading, and that is there's only 6 things, if you think about it, a market can do. And I teach this in my seminars, and we've got a webinar coming up in April, 2 days. Hubert Centers, one of the best traders I've come across in the world, is joining me for 2 days. Gabriel's going to jump on. We got an option trader from Australia jumping on, and we got Dr. Kenneth Reed, who does mindset. Everybody says I'm okay, but I've got to tell you, unless you've done it, you're not going to really be fantastic trader, because you've got to work out who you are and why you're trading and what time frame you should do and what risk you can take and all of that. But that's not for today, but that's coming up in April, a 2-day webinar. I don't think it's going to be a lot of money, and it'd be nice if you could join us. So 6 ways a market moves. This is absolutely fundamental. I teach it for some time in the webinar. I'm going to rattle through it today in about 5 minutes, but it is so important. If you think of it, a market can only do one of 6 things. It can trend, it can have a trend pause, it can have congestion entry, it can have congestion exit, and it can have a trend reversal. That's all a market can do. And if you know where you are at any time in the market phase, you are safe, because you have a conversation. You just say, hey, I know where I'm at. For example, I look at the ES daily, and straight away I know I'm in congestion. How do I know I'm in congestion? It's very, very simple. Because if I look at this trend dot that I have here, which, if I tell you what it is just a simple 12-period exponential moving average. It's gone flat, and it's just telling me I've gone into congestion. I now know that if I place from my last phantom or isolated high, a dotted line, it's got to break through that area to be outside, to break out. And when you're in congestion, you can have great trading, absolutely fantastic trading, just banging off the top and the bottom of the resistant areas. Now that I've gone into congestion, because this dot has gone flat, I'm waiting for within 5 time frames for another isolated high, which gives that little yellow dot that all you new volume people have. It's called the Hawkeye pivot, will come up, or a phantom within 5 time frames. Now, what is a phantom? Well, a phantom is this bar here. In other words, it has a higher high than the previous bar and the next bar, but the low has violated this bar here. And that bar would have generated, if it was down here, another yellow dot. So a pure isolated high is where the middle bar has a higher high and a higher low than the preceding and the next bar. And that is what paints the yellow dot. So I know exactly where I am in this trade. I am in congestion. If I come over and have a look at my weekly time frame, what am I in? I'm in trend run down, but something's telling me that maybe this is not going to accelerate to the downside. Why? Because when you're in trend run down, the dots open up. And remember, this is just a moving average, and I've just changed it to a dot rather than a line. And you can see that it's starting to close up, which means that the energy has come out. And lo and behold, you have a double bottom right down here on the yellow pivots. And when I come over to the monthly, you can see that Hawkeye went on the 31st of, it actually did it here. It went into its congestion area that came up on August the 31st. And if you draw your line off the last pivot high, which was there, and it went into its congestion here, and its last pivot low, which was a phantom low here, you can just see that it's held that on monthly. And if you look at that, you know that you can bing off that all the time. Look at this trend run up here. Look, months, years going up here, and then it goes into its congestion area across here, and you can see that you're in congestion. So you've got to learn 6 ways of market moves. It's on the website, and you are into the members area. If you don't have access into the members area, as soon as you buy a Hawkeye indicator, you have that access. Call Team 1 at Hawkeye Traders and ask for access to the members area, and they'll give it to you. And also ask access to the Hawkeye Skype room, because we have up to, I don't know, 400, 500, 600 traders a day there talking to each other. When I say talking, typing to each other about their ideas about trading. But you must know what is happening. I can make this let's go and make this a little bit of fun now. And I can say, okay, let's go and make it 15 minutes and see what the 15 minutes is telling me. Well, what's happening now? Straight away, because I've just told you, we're in uptrend. Why? Because the dots are rising. Look, and the definition of a trend run is when the dot is greater than the previous dot, the close is above the dot, and the close is in the top 40% of the range. That gives me the indication that it's going up. And then, of course, the volume clicks in on this bar, telling me to go. When that comes in there, do I get worried? No, it's an isolated high. The market's going to be tested after this big down run today. It's going to be tested. It came down. And look where it came to. It came right to the dot. Right to that dot there. Boom. And went in. And what did the volume tell me? No demand. White. The volume was white. No demand. Telling me that it wasn't going to go through the dot. So if you wanted to buy it around that dot area, you could do. And then the second bar is pushing itself up right now. When that closes, and we will know that that closes in 15 minutes, which is going to be at 8 o'clock, which is 6 o'clock your time, 6 in another 7 minutes, we'll just see. That will go green volume probably and push itself back up. And if it bangs itself out of that pivot high, we're off to the races. So that's understanding 6 ways of market moves. That isn't what this is about today. But once you join Hawkeye, go into the members area, dig up the video that I've done on 6 ways of market moves. And I can assure you, it'll open your eyes to understanding what it goes. If I was on a desert island, I would only want to know what is the dot doing and what is the volume doing. The zones are important, of course, and they're very, very elegant and clever. But I can see those as well across bottoms and tops, etc. But I couldn't trade without them. So the zones are important. But if I was on a desert island, I would want a 12-period moving average, and I would just want to have the volume. So any questions on 6 ways before I move off that? John, I can't answer that question. Call team 1 at hawkeyetraders.com. I'm not a techie, but the technical backup of Hawkeye will help you with that. If the white bars represent no demand, why are some larger than others? I'm not coming on to that. That's too technical at this stage in the conversation, but remind me, Joseph, near the end of the conversation, and I'll come back to it. So what I want to do is I want to take you through some charts now, because this is the best way for you to understand volume. Let me just tell you what goes into the volume algorithm first of all. There's over 300 calculations per bar that goes into it. And what it does, I've broken it down into 4 groups of 5 bars, and each group is weighted. So from 20 to 15 is weighted, and likewise 15 to 10, 10 to 5. And the last 5 bars are weighted individually. And as they're being weighted, I look at the open, the high, the low, and the close, and I take standard deviation between the high and the open, the low, the open and the low, the close and the high, the close and the low, and also the spread between the open and the close. And I look at those, and that will tell me, and weighted, what the volume print will be. Now, let's just look at this, and this is quite a good example. I'm going to come on to wide bars in a minute, because the volume people, you have 4 points in your indicator. You've got the volume here, you've got the pivot, which is the Hawkeye yellow dot, which I'll come on to, the magenta line. You've also got the volume paint bar there, which will paint it on the chart for you instead of underneath. I don't like that. I just find it a little bit too noisy for me. I like to see the price, but some people are okay and prefer it, so I put it in there for you. But you can see right at the bottom, and let me just extend this out. So we've had a major downtrend this morning, all the way down here. Yes, so this was the overnight market. It came on down, and then the US market comes in, and it went into a little form, still declining here, but you could say that they were going flat here. And if they were going flat on 6 ways of market moves, we go to that, we go to that last high over here. Why isn't that pasting? I don't know. Let's just see if I can get in here. Oh, anyway, it goes to that one there, to that one there, and then breaks out. So we have the open of the market here. And now look what happens. We've got some buying volume that comes in here, because it closes in the top 40% of the range of the bar. That comes in at 1445. Now, I don't trade, if any of you are trading the S&P, I don't trade for the first 15 minutes, because the stock market isn't fully open then. And then boom, down it comes. But look what happens. We get some red volume coming in here, and then there's no follow through. We get no demand, which is the white volume. No demand, no demand, no demand. And if you were tying that in with the zones, let's see if there's a zone area there. There isn't a zone area on that 15-minute, but there might be if I extend that volume out. No, there isn't. So no zones there to hold it, but you can just see that there's no demand volume coming through here. We know that it's not going to break down. It has to take the low of this bar out here, and it doesn't. And you can just see no demand. And this is what makes me rather proud of the Hawkeye algorithm. It took me thousands of hours to do this. I used to have a programmer in Clapham in London, and I used to live in Knightsbridge, and I used to drive over to him every day, and I used to sit on the sofa with my eyes closed and describe my interpretation of volume, and then he'd program it up and we go away and test it. Nearly every other volume program out there would paint this as green volume, and we didn't. It was just painted as no demand, because for the range of that bar here, we should have had more volume. And that's why I get this question asked to me all the time. If you look at the volume radar, which are the yellow, blue, and red dots which we run across the volume, that bar there is as high as this bar here. This bar here, we put a red dot on saying it's ultra high volume. This one is yellow, saying it's not high enough volume. This is the overnight market. Now the pit comes in here, and for that range of bar, there should have been a lot more volume in it. And of course, markets do not turn on a dime. They take time, they take energy, they take the fuel. You've all heard the volumes, the gas in the tank, but they take that energy to get going. And sure enough, there it is. It comes down. Now, for all the technical traders out there, you'd say that's a flag. And it comes down here and boom, look what happens. We come in, it paints the yellow pivot low. The volume comes in on the next bar and you're in. And you're in on this trade to the upside. That's just using volume in isolation with just an ordinary moving average. That's all I'm using here. And it's just pushing it up, and it's just showing you what the market's doing. And just like Gabriel was talking about how sweet his trading is by looking at the zones between the levels, my trading is sweet by just looking to see what the volume is doing compared to the dot. And of course, I've got a Hawkeye trend dot, which is a lot more elegant than this 12-period moving average. But I don't want to come across as a snake oil salesman and say, you got to buy this, you got to buy that. Hawkeye volume is standalone. The zones are standalone. If you want to add to it by buying other Hawkeye indicators, so be it. But if you want to use your MACDs or your moving averages, or stochastics, they will all be enhanced by understanding what the volume is doing. So let me just talk about the wide bar here. The wide bar is the magenta line, and that is twice average true range over a 20-bar period. And what will happen is that about 90% of the time, which is a huge stat, that within a wide bar, the next bar will close within the range of the wide bar. So never go long or short on a wide bar. Always wait till the top is broken or the bottom is broken. And when I say top or bottom is broken, I mean on close. So boom, down it came, wide bar. Not interested. Next bar, what did it do? Closed inside. Next bar, closed inside that bar. Then another wide bar comes in. The next bar closes within the range of that bar, vice versa, and then it comes down, and then we get the breakout on close on this bar with volume, boom, and it's off. Now you might say, where's it going? Well, I don't know whether these will work here. No, they won't. I like using average true range, which is an indicator which is in the Hawkeye suite. But on this, I haven't got it set up because I just wanted to show you 6 ways. My next question is going to be, is it going to break that pivot high there? Well, right at the moment, the odds are in my favor. Why? Because I've got green volume that came in on this bar here. And remember, markets go through a very logical sequence. They go through accumulation, price move, distribution, return to fair value, accumulation, price move, distribution, return to fair value, etc. That's why markets zigzag up and down. Markets are only in trend for 30% of the time. Excuse me, I need a sip of water. So we know that it's going to hesitate round this pivot high here. But at the moment, we've got the volume coming in, and I want to see what's happening. Of course, this is over the lunch period of the S&P, which is always a bit quiet. You will see that at 2:30 on my work in the afternoon Eastern, the market seems to get going again. And I really love scalping the last 45 minutes of the S&P. But go on to the website, go into 6 Ways of Market Moves. There's a video on there. Go and learn it. If you want more, come to the webinar, which is in April, where I really go through it in detail. Now, before I move off the 6 Ways of Market Moves, I just want to switch over here and read any questions. Jeffrey's asked a good question. I don't discuss too much the height of the volume bars. I discuss what color they are. As a general rule of thumb, the answer is yes to that. I only want to see the color. However, there is something which is rather important. And I know that a lot of you will say, this is so subjective. Well, yes, it is. Trading is an art form. If it was that easy, NASA would have made a program for it, and they haven't. And you've got to understand the markets and understand what's happening. Here we go. Now, is it going to get up through there? It's gone up through on green volume. Remember, the last one was 6 o'clock. Yeah, we're just up there, 6 minutes over. So it's pushing itself up. It's going to struggle a little bit here. Let's just wait and see. There'll be people in there saying, oh, this is a resistance level, and they'll bang it back down again. So maybe for a couple of bars, it'll hold itself back here. But at the moment, it's in uptrend. One thing is very important. When you see a downtrend, and you see ultra low volume come in, markets do not go down on low volume. In up markets, they do, particularly on stocks they do, because stocks go through the accumulation and distribution phase in a different manner from particularly forex and also futures. So I really only look at the color of it, but if I'm in a stock and I only trade a few stocks, Newmont, BHP being the main two that I trade. I'm interested in down markets and low volume because that's showing me, hey, something's happening. There we go. Now, it's going to be very interesting to see what happens here. But the volume gave you the lead in here, pushed it up, and look, we got a yellow dot here, pivot. Remember that when you see a yellow dot, you expect 3, 5, 7 bar reactions of them. 1, 2, 3, there it is. 1, 2, 3 coming up here. Will it hold on 3 and start reversing, or will it go 5 to the 7 and carry on? But markets run out of steam. They have to consolidate. I don't know if many of you read Gann, but he used to do squaring of time and price. Well, I've been doing a lot of development work just for my own fun on squaring price and volume, because everybody sees everything at the same time now. So people get into things, and markets move too quickly, and that's why a lot of the educators out there are saying only buy the pullback, wait for the breakout, buy the pullback. I believe that I will be able to come up, hopefully like Gabriel has done, with an indicator that will show me when the right amount of volume has gone into a breakout after a pullback to show you that it wasn't a fake breakout. But anyway, let me just answer any more questions there. Frank, you're right. Yeah, you could trade on the direction of the dot. No, Kay, I didn't say that. You're not waiting for the yellow dot. This 6 ways a market moves, which I'm showing you, is a conversation piece. It's telling you, here we are, 1, 2, 3 up, 1, 2, 3. It's just giving you conversation pieces. It's telling you what's happening. I'm in trend run at the moment. All my dots are going up. I'm in trend run. So, I'm just sitting in it. So let me start moving off this because I don't want to wait too much time on that. So when we come across here to crude, let me show what's happening on crude. And this is why I wanted to put the two presentations together today to show you the way that I also like looking at the zones. Now, we all have different spins on things, but putting the zones, and Gabriel is far more au fait with how to use the zones than I am, but I like looking at the volume in the zones. So you can see that the zones here, the zone is covered in green. So we know that the bias is to the upside, and then the volume comes in and it's pushing it. And there's the the false breakout. There's the test coming back down. There's the yellow dot within the zone. No demand, no demand, no demand. We know it's not going to go down. We also don't know if it's going to go up. Boom, here comes the volume in on that bar, on this bar here. Let me just make that a bit clearer for you. Comes in on this bar here, and boom, up it comes. And it comes right up to a zone area. And we put the yellow dot in the zone, knowing that it is a resistance area. And we have some red volume here before. So the red volume comes right on that, pushes it down. It comes to have another look to test itself. What I would say, and it's rather facetious what I'm going to say, the amateurs see this and don't understand market structure and are buying this, and you can see that the volume is green in here. It's got to get up through here. This bar, when it closes, will turn itself red, validating this here. It's done its test up, it's suckered in the amateurs, and then it will come back out again. Now, when we take that across our triple time frame, you can see that the 15-minute, 30-minute, and 60 is all showing me on these bars that it is bullish. Well, it is bullish. It is bullish on the 30 and the 60-minute looking at the volumes. But here I've got distribution volume going on because I've got green, white, green, white, green. It's just telling me, hey boys, market doesn't know what it's doing. So you've got to go down to the lower time frame. And if you were trading this intraday, you would say, okay, I'm taking it here. I can see that my 30-minute and 60-minute are an uptrend. Where am I going to come out of this? I'm going to come out as soon as the Hawkeye comes up to a zones area, or it starts putting in the red volume, and I've got a pivot high behind me. I'm taking on risk here. I've earned very nice. I've taken $2 out of this move. Thank you very much. I'm off to dinner. And that's the end of it. And as you can see, it's been rejected by that isolated high here and being pushed down. The volume was also declining, which, as I said earlier, really doesn't mean too much, but this will come up at 8 in another 3 minutes. And if it stays where it is, it'll probably, I'm just looking at that, seeing as I wrote it, it will paste red volume. Let me come across and give you another example. This is crude in the pit session, and I've got the price on the volume on here. Now, one of the things that I'm very keen on in Hawkeye is tick charts, and I invented with another guy called Tim, who I thought was in the room, a indicator which is the Hawkeye zone gearbox here. And this is the gearbox and gear changer. And this every day tells me the tick speed to trade with. And this during the day tells me what color chart to go to. Now, I'm not going to go into this in detail because I'm not here to try and sell you any indicators. I'm here to try and get you to really understand what you already have. But when we get to here, you can see that this is yellow. So it's just telling me trade the yellow chart. And there you can see I've got yellow. And what happened? It comes right up to a zone level, puts the pivot in, no demand volume comes on it. After it rather, now I've got some red selling volume, and that's pushing itself back down. And that's coming off the 3760 tick, which Hawkeye generates each day. There's a different tick speed each day. And it just seemed ridiculous to me that intraday traders were just saying, well, I just trade a 5-minute or a 15-minute. They're curve fitting. You need to trade what the market profile is, what is the DNA of the time frame every day in the market. And it's a bit like a cyclist riding, you know, you change gears as you hit hills, etc., etc. And it's exactly the same with trading. And that's why I came up with this idea. It took 3 programmers and 5 years to do this. And we're the only ones in the world, to my knowledge, that give you what I call the DNA of the market day in, day out. And it works on any of the instruments. And this will show you exactly what is happening. Now let me come over, because I want to get to questions, and there are a lot of questions coming in on understanding across stocks. So when I look at stocks, it's exactly the same. And don't turn off if you're saying, well, I'm not a stock trader. It's exactly the same methodology on any of the markets. So please don't be put off on this. So yet again, here we have Bank of America. You can see what it's done today. It's been up here. It's been into a zone. There's a pivot high, which you have in the volume package, and down it comes. And you can see that as it comes back down here, we got no demand volume yesterday, and that no demand, not yesterday, what's today, the 24th, yeah, no demand in the first third of the day came through with no demand volume. And you can see that the yellow dot came in showing me that there was high volume that came through. So it came through there. Now, one's going to wait now to see what is going to happen, because when this finishes, it'll paint its volume. And we know that support and resistance is always visited. And it'll come back up, test itself here, and push itself down. I don't know if many of you watch Hubert Centers, who the Centers Group has just bought 40% of Hawkeye. He is a big trader on the using the Ichimoku cloud, and he likes to see price retrace itself to resistance and then sell it off there. And the reason that they bought into Hawkeye was that they could see the value of the volume as price comes up to these key levels. And you can see it over here on the daily. You can see it came up here, put its pivot high in there, came down. Now I'm not expecting it to do too much because there's no demand volume. Green volume was on the pivot high, but it didn't do it. It pushed itself back down. Then we had no demand volume that came through on that bar, and I want to see what's happening. If it carries on with this profile, it'll be some green volume coming in, or maybe no demand. The spread isn't wide enough, so that will come up, and that's what I'm doing, is just, I call it forensic analysis, not technical analysis. You've got to go through and really see. And again, if you come down here, here is one of the Hawkeye zones. There's the yellow dot. There's the volume. Here it is, testing itself again, getting steam up. It'll push itself out of here and push itself back up. Let's go and look at Apple, most widely held stock. And you can just see again on this, it's in the orange zone here, price area it's visited, can't get out of it, and the volume is against it. So it's just going to be pushing around here. We had red volume yesterday pushing it down, and you can see support coming in here on the weekly, but we've got 3 weeks of selling volume coming. It's going to come down and test itself. It's got to test that low there, and that low's at 92.59. It'll test that low, and if it tests that low on low volume, we know that it won't break through. If it tests it on average or high volume, it'll break itself through. All support and resistance levels need volume. It's the muscle in the sledgehammer to get through the floor or the ceiling. Anybody wants me to look at a stock whilst I'm on the stock stuff? Ron and Susan, why the 15-minute there? How does the gearbox and ticks? It doesn't, Ron. I was just showing you tick speeds as opposed to time. I much prefer tick speeds. Okay, let me just put in. I got a request for a few. I don't want to spend too long on these. No more, please. No more. SLW, whatever that is. Silver Wheaton Corp. What do they do? So look at that. 1, 2, 3 bars of no demand at all on the third of a day. Then we have here. This is interesting. This is classic stuff. We have our pivot high here, which is visited today and backed right off, coming back down. We've got our declining volume. At the end of the day, we should be painting red volume on this. And then if we come to our weekly, you can see that the weekly is still in uptrend and will remain in uptrend. But if we come over here to that pivot high here, remember what I said earlier, I like to see no part of the bar straddling a pivot high. And you can see, by the way, for you people with the volume, if you, whoops, let me just get rid of this. If you come in and format it, inputs, and put true in there, it'll draw the extension off the last pivot high and low for you. So you can see on the weekly, there's a pivot high there. There's its area of resistance, and no part has broken out. So this week straddled it. This week is still straddling it. I wouldn't want to get into this to the long side at all. And I'll just give you, for Joseph, I'll give you RTN. I don't know what that company does, but I'm still building data on it. Here we go. So again, there is the pivot, and you can see that the bar, this high bar, is still straddling it. So as you were looking at it during the day, it went up through it, but closed back down under it. And now you can see that we've got some red volume that came in yesterday, pushing it down. I'd look to see what happens down here, and I'd look to see what happens at this pivot low here. But at the moment, this is going to be pushed down. And why does that's a very good question. Why does the price not fall if there's no demand? No demand means there's no firm buyer or seller in control of the market move. That's all it means. It just means nobody showed their hands for the range of the bar, the open, the high, the low. All it was telling me is there was nobody in control of buying or selling, so it's no demand. And somebody wants, this will be the last of the stocks. Boeing, what's Boeing? Somebody, BA, why haven't I got BA there? Let me put it on down the bottom. BA. I'll show you the stocks that I trade. Oh, well, classic. Look at that. Pivot high, red, no demand, a little bit of buying volume, pushed it back up to the last pivot high there. You could see it didn't hold it, and boom, down it came here. And now there was yesterday's selling volume that came through. Classic. We've got it down here. It's probably going to retest itself down to the 103.38 level. I would say 105.07 definitely. It'll come and revisit itself down here. I wouldn't want to be too long of that one. Okay, let me carry on. I want to show you stocks intrabar. Well, let's go back to Boeing, and as well, we'll go to Apple first, which is the big stock. See what that's done. Well, there we go. Look, it's come back down into a zone. No demand. This is classic. So here is the rookie trader coming down here, thinking this is going to go down. Yes, I'm going to get short on this. Wide bar. There's the magenta wide bar. What happens? The next bar, we know 90% of the time the next bar will close up within the range, which it did. And it closed itself up within the range on what color volume? No demand. So there was no demand further to push this back down. We then on the next bar get a pivot low, the yellow dot. We then get on this bar a pivot high comes in, but it comes in on no demand volume. We know it's not going to push itself down. It comes down and then it pushes itself back up, puts another yellow dot in. Now, what's this telling me? That yellow pivot is greater than that yellow pivot. This is going up, and boom, Sure enough, it comes out of the zone, finds its support, some green buying volume comes in on that bar, and it pushes itself out. That's on a 30-minute. If I look at the 60-minute, you can see it's come right down, no demand, right on the level, which tells me that this down move is finished. There's no momentum. There's the magenta wide bar. There's the close within it. It happens all the time. You know, the next bar will close within the range 90% of the time. You can nearly say that was closing within, but as soon as it closes out, boom, down it comes, finds its support. That looks terrific. I like the look of that. I was just going to look at Boeing, wasn't I? Now, whilst I'm doing all this, let me just tell you, you must do work on your mental fortitude. People just overlook it. And when you're learning to trade, you lose money. As you lose money, you wire yourself up to fear, and then you trade with too tighter stops. You trade too faster time frames because you think that you can limit your losses, etc. Nothing's further than the truth. Do some work. I've got a great guy in there, Dr. Kenneth Reed, who did a PhD on trading. Go and see him. He's not expensive, and it's Hawkeye Mindset. It's on the Hawkeye website. I went off. I don't know if any of you have heard of Mark Douglas, who wrote The Disciplined Trader and then Trading in the Zones. I took myself off to Chicago and had a one-on-one with him back in about 1989, something like that. And he really turned me around to basically by telling me all we're doing is trading probabilities, not right and wrong. And that's why I never say I've had a losing trade or a winning trade. I always say I've had a plus trade or a minus trade, because if you have a losing trade, guess what you're telling your subconscious? You're a loser. So that's very important. So there we have green volume coming in, boom, off there. We have a beautiful isolated low pivot there that also confirms up here. And if you come and get educated by Hawkeye, that will tell you that that's a phantom low there. And what do we have here? We have a wide bar on the 120-minute. We know it's going to go up 90% of the time. Boom, there it is, free trade coming in. So that's a great example. Commodities. Now this is the main market that I trade. When I started, I really like commodities and I really look at them. So, you know, I don't have to tell you anymore. You know it already within an hour and a half of this presentation that it's come up. The volumes here, we got a phantom there because that high is higher than that and that. We know that it's going to push itself down and it'll come down and revisit this area here of support, of supply on the weekly, and push itself back up. Why? Because there's no demand there, which means that there's nobody selling there. There's also nobody buying there. As soon as it breaks out of that high here, which is this high over here, we know that it's going to start going to the races. But if we look over at the monthly, it's telling us a different story. It's got its double top in there. There it is there. There's the wide bar. There's the close within. Comes up, tests itself, tests the support off that pivot high over here, comes back down, and you can see that it's trying to rally itself back up. This week's an important week. What I would really like it to do, funny enough, is to go down this week and get some more accumulation volume back down here. Sorry, I'm talking about the monthly. Come back down here. We're nearly there by the end of the week. Come back down here and get some more accumulation volume coming back into it. Let me just show you. Everybody asked me about gold. I do a lot on gold. Just absolute cracking trade, this. And for any of you who read my newsletters just before Christmas, I said, you know, we're coming into the new year. The trade of 2016 is going to be gold. And you can see it came down. It found its support on the zones level, pushed itself right back up. There's the wide bar. We know it's going to go down 90% of the time. Down it came on no demand. And now the buying volume's coming back in, pushing itself back up. That pivot low is higher than that pivot low. That pivot low is higher than this one, etc. And that one, pushing itself back up on a daily. We know that it's got to get through this high to really get motoring, and that high is at 1256, and you can see that it's coming back out over here, and it's got to jump the creek over here. It's got to get up and go above 13.99, which is a long way away, to really show that it's on its way, and then brace yourself. It's going to be a mammoth trade, and very, very important. The other things, let me just show you Newmont, which I like trading, and you can see Newmont, the gold miner, right up in here, pivot highs, etc. No demand, still a bit of buying volume. It's going to test itself here, but I've got so much going on my monthly down here telling me that we're going to go, and I want to see it up to 27. I want to see it up to this zone here, and then I'll probably start lightening up, waiting for a pullback. And BHP, the great Australian mining giant, you know, there it was, gapped right up. Now, let me just toot my horn. How many other volume packages would show you no demand on that bar there? Look, it went right up, gap up on good volume. Hawkeye algorithm points at no demand, and sure, it fell back, and today, look where it's back down. It's back in the zone again. So that's a great one. I do a lot of trading on BHP. Let me just come over to I don't know, any GDX? Yeah, I'll show you GDX. That's the gold mining index. It shows you what all the gold miners are doing. And again, it's right up here, virtually the same profile as gold. It's got a lot of overhead to get through, but once it gets through 2148, this is off to the races. I'm not doing any more stocks. Thank you very much. Anybody wants me to look at any futures? Jeffrey, you're spot on. That's all I do. TF, okay. Anybody trade things like cotton, coffee, natural gas? Okay, I'm coming to forex in a minute. Nobody out there. I like looking at sugar. You can see what that's doing. We had this down move here. There's the pivot there, holding it, pushing it back up. There's the volume that came through. We know that this day's going to be a down day. It tried to push itself up. It won't do it. Coffee, only trade coffee if you've got deep pockets, please. That's just going around. The feeder cattle's quite interesting. Look, right down to a zone area, bounced itself back up on volume. Live cattle, right up. Look, that's going to, now, that's interesting. Tomorrow, if that comes down, that's going to put another yellow dot in there, and it'll give a double top right in the zone area. Okay. I've done crude. How about that? TF. Let me come on to everybody wants the stock indexes, so let's have a look at the daily on that. Let's have a look at the NASDAQ. There it is, right up into zones 1, 2, 3, 4, 5. What did I say? It went up 5. When it comes down like that, bang, bang, you know that there's a bit of strength in it, but it's stalled out on that point there. And of course, as Jeffrey pointed out earlier, the volume is declining. Not that I really notice it, but for it to get up through here, it does need to have accumulation volume. This could be accumulation volume because if the next day's up, that's going to paste another yellow dot there. TF, the Russell, they're all going to be similar. Phantom high there, high there, high there. They're going to push itself back down. No volume's going through here. No volume's going to go. Just market makers, price move. And the YM, well, we got that pivot high there. That hasn't broken it. That's a phantom. 1, 2, 3 down. Come down to look at this again. So there we go. Sam has asked a question. Sam, the answer is yes to what you're saying, but I'm only as I said, I don't want to come across as somebody who's out there pushy and saying, you know, you got to go and buy this, you got to go and buy that, etc. When you get the whole Hawkeye suite, you will see that it draws it all in for you. Let me just see if I got that there so I can show you on oops, wrong one, on the daily for you. Let's just see if you can see that. So that just shows you the whole Hawkeye, so you know that you're in downtrend, etc., etc. And you have to learn that. It's on the website, so this would have kept you short from there on the YM, which came in on the 13th of November. 13th of November, you can only be short on this market, and it's telling you what is happening. So that there is going to be, that's a phantom high pushing itself back down, etc. So yeah, on the website, you can get in and see it all, and there's lots of videos on it, Sam. There's a Wednesday room that you can come to and see Hawkeye as well. Come to the webinar in April, beginning of April, and I can assure you it's not a lot of money. When I say a lot of money, it's certainly under $500. We haven't priced it yet, but it will be. And that's a 2-day one. So I just want to show you some. I don't want to just keep going and going. Forex, this is all very good stuff. This indicator here that I have, by the way, is Hawkeye Fatman. Each currency is represented by a color. You can see that the Australian's red, the British pound is orange, Japanese yen, etc., all the different colors. So poor me, being with the British pound, you can see when it got up to this point here, it was severely overbought, and this orange line has just declined. So you can only go short, and you can still only remain short. And that is against the yen. I'd rather see it against the US dollar. And why do I say that? Because the US dollar is this cyan line and it's going up. So let me just go and press that. And this over here is the radar screen in TradeStation, and this shows me how long everything's been in trend. So if I just go and do that, you can see that here we are. It's in downtrend, and you can just see that I got the red volumes here pushing itself down. This doesn't look very beautiful. 139.19, you know, not long ago it was up at 165 about a year and a half ago. But it's got these areas here. If it gets under 135, my goodness, thank goodness I've got a lot of trading dollars. My account's in dollars, so that's good, but it doesn't look good for that. But what I'm really trying to show you is just understanding what the volume is telling you, no demand, using that with the pivots. It really, really gives you the edge, and you can be highly successful in this. But like everything, you've got to work at it. It takes time. And, you know, I lost a lot of money to start with. It took me about, people often ask me, how long does it take to really learn? I think it takes 3 years to really learn how to trade, because learning the indicators is easy. We're all pretty educated people, or else we wouldn't be here. Learning the indicators are easy. Actually, understanding yourself is hard. And it's a combination of all of that and great money management, and you've got to learn money management, which we also show and have indicators for. So I just want to come back to, let's say I come back to here. I just want to put on the whole of the Hawkeye so you can see it in full flight. So this is telling me that we're in an uptrend here. And to answer your question, Sam, one of the hardest things is that people don't work hard on their exits enough. they work a lot harder on their entries than not at their exits. And there's a money management tool that we use in Hawkeye, which is the Hawkeye Levels ATR, which stands for Average True Range. And I'm always trying to get to the yellow line, the 3 line, I call it the sunshine. All this 5 line here against sunshine. And markets seem to go in 8s, rather like octaves, 8 notes on the piano. You'll normally see 8 ATR moves on strong markets. And now it's gone to 8, it's banged itself down to 4, it's gone back up to 8, and you can play those once you get skillful. Now, I did say, and we're coming nearly to the end of this, I'm going to just do one other thing, if I may. For the people who don't have zones, I don't know how to do this. This is the buy link for the zones. And for the people who don't have the volume, which I've discounted down to $97 from $360. I can't even send that. Oh dear. Oh, I think it goes in there. No, I'm challenged. Let me just, for the volume, it's just go to hawkeyetraders.com/today and you can get the volume for $97 instead of $360. Why can't I do that? I get so challenged with this stuff. Select questions to be answered. No, we won't be putting it on eSignal. Send to all, here we go. We won't be putting it on eSignal. eSignal doesn't have a huge take-up, and it's a very complex piece of programming to do. We have everything on TradeStation, Ninja, and MT4, and then we have Hawkeye on eSignal and TradeStation as well. So you got it all apart, and multi-charts rather. So Hawkeye's on eSignal and multi-charts. Hawkeye with everything, including the zones, is on Ninja, TradeStation, and MT4. So I've been talking for a long time, and it's coming up to 7 o'clock at night here in England. So are there any more questions, or else I'm going to close today and share the record and try and save the recording and get it posted back out to you. Frank, you can keep talking to next week. I keep listening. Thank you very much. Ask me some questions about trading. I can give you some more tips on trading. I started off by saying, just remember, trading the time frame is the most important thing. What is the right time frame? Try and trade the slowest time frame that you can and take a smaller position. You'll be far more successful than trading the faster time frames, which you're seduced into by brokers and things. Sam, do you know, this is awful. I don't know how much the psychology classes are. Go on to hawkeyetraders.com and go to mindset, and you'll see it there. Really go and listen to Kenneth Reed. He's very, very good, but he'll also be in the webinar in April, the beginning of April, and he'll be doing a presentation then. So you might prefer to come and get everything and listen to him as well, and you'll find it. Frank, to start trading with a few $100 at risk, what to trade? Anything where there's a low risk entry. Just remember that trading is not a get rich quick game. It's long and slow and build it up. If you can earn 3% per week, you're going to increase your account on a 10,000 account to nearly $1 million in a year. I hope to be starting a FX room where we're going to do that. I've just funded the guy. PW, that's a great question. I normally answer that right at the beginning. Not meant to be rude, but if you can make plenty of money trading, why go to the trouble of selling your indicators? Great question. Do you know, I don't have to sell them, and I don't particularly mind if I do or don't. Trading is very lonely. I had a big company before. I had nearly 300 people working with me, and I got into trading by default, and I'm a gregarious person, and I just love talking about it and doing it. The money that Hawkeye produces for me, I have to tell you, is insignificant to what I make out of trading. But I really enjoy it. I mean, I go down to Argentina. There's a big group down there. I go to Sydney. I go to Perth in Australia. There's a big group there. Malaysia, Singapore. In Europe, I've got some hedge funds who use my stuff. It's really nice. Otherwise, I just sit in the spare bedroom, which I've turned into my trading den, and probably turn into an alcoholic. That's all. I really enjoy it, and no more than that. And that's why I try and be as generous as possible. Unfortunately, we're a bit of a business now, and there are people that I have to feed every month from it and cut them checks. But I try and be as generous as possible, and that's it. So all, thank you very much indeed. I'm going to stop this now, and thank you all very much indeed. No, the zones is 697 instead of 1,000. You know, Brian, you're absolutely right. You can't go down to the pub every night and find anybody that you can talk to. Frank, you're absolutely right. Trading is all a constant learning. I learned something from Gabriel, and it's a wonderful journey learning to trade. It's a wonderful journey. So thank you all very much. I'm going to go and have my supper now. Thank you. Bye-bye.